Hi and welcome to InvesTube. Less than a week ago, Warren Buffett, for many the greatest investor of all time, by achieving through his holding Berkshire Hathaway annual returns close to 20% for over 50 years, made an interview where he gave his opinion on the current situation of the markets, the crisis in the financial system, the decisions of the Federal Reserve, and announced a major investment of Berkshire Hathaway in Japan.
It was the first time since the pandemic that the Oracle of Omaha conducted an interview of more than 3 hours, so all investors did not miss any detail about the investor's opinion regarding the future of the economy and stock markets for the year 2023. Next, we will review everything Warren Buffett said, and we will discover how this investor is facing the tense economic situation that we are still living in the markets, what he advises us to do, and what is the reason why he has decided to invest in Japanese companies.
In the interview, Warren Buffett appears with his future successor on the throne of Berkshire Hathaway, Greg Abel, on CNBC channel from Tokyo, where, as we will see later, they are meeting with Japanese companies in which they are investing. As you know, Warren Buffett is already 92 years old, and despite the fact that on many occasions he has stated his intention of never retiring, one of the main concerns of investors revolves around what will happen to Berkshire when Buffett is no longer around.
Investing in Berkshire Hathaway with Warren Buffett has been one of the most lucrative investments of the last century. Just to give you an idea, if you had invested $10,000 in Berkshire in 1988, the year in which, as we saw in the video we left here, Buffett started investing in Coca-Cola shares, today that investment in Berkshire would be worth more than $163,000 in the stock market. Buffett sent a clear message to the markets by appearing in the interview with his future successor and said that he was fully prepared to take over as chairman of Berkshire, assuming that he was already the one in charge of all the operational part, and highlighting their great similarity in thinking and making decisions about business, and adding, "He already improved dramatically, the management of Berkshire. I mean, he's a big improvement on me."
Warren Buffett was then obviously asked about the current tense situation we are experiencing in the financial sector with the failure of several banks in recent weeks. The investor pointed out that some banks were still making mistakes, similar to those of 2008 or 2009, pointing directly to the way these businesses were being managed by their management teams, who often do stupid things, he said. It is worth remembering that in recent years Berkshire Hathaway has decided to sell all its positions in banks such as JP Morgan, Goldman Sachs, Wells Fargo, and others, holding only Bank of America position. Buffett took this decision after detecting warning signs in these companies for taking unnecessary risks and trying to mask their losses. In this last interview, the investor said, "I don't like it when people focus too much on the earnings number and forget about the banking principles." Don't forget that the best way to support this video is by hitting the like button and subscribing to our channel.
Referring directly to Silicon Valley Bank, the investor tried to call for calm by saying that there is no need to turn a foolish decision by a few managers into a panic situation for the entire US population over something that doesn't need to be panicked about. Buffett said he believes there will be more bank failures, but that citizens should not worry because their money is protected, adding, "Nobody is going to lose money on a deposit in a US bank."
Before revealing his amazing investments in Japanese companies, Buffett highlighted the great work being done in his opinion by the Federal Reserve, mainly Jerome Powell, unlike the opinion of other well-known investors such as Ray Dalio, Cathie Wood, or Nouriel Roubini, who have strongly criticized his decisions, as we have seen in previous videos on this channel. Buffett said that the Fed was doing an excellent job, and that even he does not believe he could run the Fed as well as Powell was doing. Buffett tried to defend Powell by pointing out that the Fed can't magically stop recessions, neither can they turn bad loans from banks into good loans, or anything like that. But they do have tools to try to keep the overall system working. And the system was about to stop in March 2020, which would have been disastrous. And thanks to their good decisions at that critical time, the economy kept going.
Whose side are you on? Do you support Warren Buffett's words about the good job the Federal Reserve is doing? We would like to read your opinion about it in the comments of this video.
On many occasions, Warren Buffett has stated that interest rates are to stock prices what gravity is to the apple. When interest rates are low, the gravitational pull on stock prices is very low and they tend to rise, and the same thing is true the other way around. Although most analysts expect a lowering of interest rates in the coming months in the context of an improvement in inflation data in recent months, Warren Buffett detailed that he cannot predict what the Fed's decision will be in this respect.
I've been in business, running Berkshire for 58 years, and I've never opined an economic forecast of any use to the company. And all we have to do is keep running all the businesses as well as we can. And we have to keep a lot of cash on hand to keep people making smart decisions. If my life depended on economic forecasting, I don't think I would make money. I don't know how to do that. And there are people who try to predict things, but it's of no use.
Continuing with the interview, Warren Buffett and Greg Abel explained how Berkshire usually takes advantage of panic situations in the markets, such as the one we are currently experiencing, to generate great long-term returns on their investments. If we look at the following graph, the best returns in the last 20 years have been achieved by investing in times of maximum market panic. Warren Buffett has always been very clear about this and has known how to seed in those moments. For example, the spectacular returns obtained by the S&P 500 in the years following the dot-com crisis in 2002, in the Great Financial Crisis of 2008, or in the recent pandemic in March 2020 are outstanding. It is at these times that Berkshire Hathaway has historically invested most consistently in companies.
The results are exceptional because Buffett seeded those investments in the moments of greatest pessimism with a long-term mentality, investing in companies with great competitive advantages that had been dragged down by general investor pessimism and a bad economic situation, and collecting the fruit of those investments in the future.
One of Buffett's most surprising comments to investors was when he admitted that he was investing more money in these 5 Japanese companies, currently owning 7.4% of the total shares in each of them, and not discarding the possibility of increasing these positions in the future. In the interview, Buffett made it clear that he likes these companies so much that he would be willing to buy some of them completely if the opportunity arose. They are businesses that he understands perfectly well, with a philosophy and business very similar to that of Berkshire Hathaway, and that have increased their dividends by more than 70% historically. These companies are conglomerates that import everything from energy and metals to food and textiles to Resourcebo Japan. They are some of Japan's largest companies, and a fundamental pillar of its economy and the country's globalization.
Buffett, after his meeting with these companies in Japan, was clearly surprised with the high quality of these businesses, in which he became interested 2 years ago when he was surprised with the price at which these companies were traded. He stated that he intends to hold these investments for the long term, for 10 to 20 years, and that he could increase his holdings in any of these companies to a maximum of 9.9% if he so desired. The profits of these 5 companies are expected to reach a record high in the current fiscal year. So it seems that Warren Buffett would be taking advantage of the prosperous moment these businesses are going through.
What do you think about Warren Buffett's investment in Japan? Do you think it could be interesting to invest in this country? Let me know your opinion in the comments of this video.
Don't forget to hit the like button and to subscribe and activate all the notifications of this channel. See you in the next video. Greetings and good investments.